Darrel, on Wednesday morning, USDA released its latest crop production figures. When you took a look at those numbers, I see that you've written that maybe the corn has peaked out given the numbers that came from USDA.
I think probably new crop corn prices have peaked for at least for now and perhaps for the marketing year. We have to remember that we're still looking at forecasts on crop size, and those numbers can change as we move forward. But the combination of a crop of around 10.7 billion bushels and indications that consumption is slowing down quite a bit suggests that we probably have seen the high in the market. I don't think it's probably useful to get too bearish at this point moving forward. I think there's two issues on the corn balance sheet. One, my opinion is that the production number will get a bit smaller moving forward. I think we will see the estimate of harvested acres come down a bit and perhaps the yield number come down a bit as well. And I also of the opinion that perhaps ethanol demand is stronger than depicted in the balance sheet, which shows a 10% decline in year-over-year use of corn for ethanol. I think we'll probably be a bit stronger than that, perhaps a couple 300 million bushels. So the balance sheet, I think, will end up tighter than what it appears right now. But again, given that prices are 70 cents off their high, I'm not optimistic that we're going to come back and put new highs in the market.
Will the balance sheet change very much at the end of this month when USDA releases another update at the marketplace?
Well, we'll get the old crop inventory number. So what can change on the balance sheet is the level of beginning stocks for the 2012 marketing year. We've been surprised by those reports in the past, and so there is room for some minor change, but it'll really be the October crop production report that has the possibility for bigger changes.
So quarterly grain stocks is due out at the end of the month, and then the October crop production report, which includes an updated set of FSA numbers for acreage.
They do incorporate what the FSA has to say about planted acres for those producers participating in the government programs. Obviously, that's just one piece of input into their acreage number. They rely most heavily on their own surveys for actual planted acres, and most important in this report is going to be harvested acres, and of course that's not in the FSA data set. It's planted acres only.
And the October numbers are usually pretty close to the final numbers when they're released in January?
Historically, the margin of error has been pretty small for the October report, and gets even smaller for the November report. And given the relatively early harvest this year, we would anticipate a pretty accurate number in October.
Is it your opinion that the soybean market is tighter in the supply and demand balance sheet than the corn market?
No question about it. The crop is much smaller on soybeans. We're looking at an average yield of only 35.3 bushels, a crop just over 2.6 billion. This follows a very small crop in South America. Unlike corn, we really have not seen the kind of slowdown in consumption that's needed. Based on the current forecast of crop size, we need to cut consumption close to 500 million bushels during the year ahead, and that's going to have to be split between the domestic crush and exports. And at this juncture, we really have not made that kind of adjustment in consumption. So I think we have a bit more rationing to do. And so I'm a little more optimistic that soybean prices will stay very strong probably into October until we see one of two things, either a larger crop number in October or some confirmation that consumption is slowing. But absent either one of those, soybean prices are going to have to stay, I think, very, very strong.
And the export market for soybeans have been on a blazingly fast pace.
They have, and as we saw today, and as we have seen in the weekly numbers, exports for the marketing year that just ended in August came in a little stronger than forecast, 10 million bushels, and new crop sales have been very robust, and we're picking up the benefit of the small South American supplies. And so the expectation that South America will rebound next year is really going to be important. We're going to depend heavily on a very large South American harvest to kind of make current small supplies stretch through the calendar year 2013.
On the subject of the export market, better come back to the corn very quickly because USDA says this will be the smallest export for corn in decades.
Yeah, I took a quick look like the smallest number in 27 years, perhaps, for corn exports. The question is demand really that weak? What is the market using in place of U.S. corn for the year ahead? We're going to be limited to some extent by available supplies, but there is a potential that corn exports could be a bit stronger than currently forecast. We're really not seeing it in the sales yet. Sales are really anemic, and I think we would want to see some better sales before we say the number is really too low.
Prior to the September crop production report, you were of a mind that it was time to wait for that report to decide whether you were going to make mini sales for corn and soybeans across the scale as a producer. Have you come to a decision?
Well, I think, what we've been saying is the price structure really does not favor storage of either crop, and the price levels that we've been looking at, $17 beans plus $8 corn. I think we've been of the mind that moving a lot of the crop right out of the field was the best way to go, and I don't think there's really anything in this report that changes that. I think we may have really a little more time on soybeans than on corn, but again, you'd have to speculate on a higher price level rather than being rewarded by the carry in the market.
Speaking of rewarding and speculation, would you want to own either of those again on paper?
If I've made sales, I don't tend to second guess and want to re-own. That really opens the opportunity for making two mistakes rather than one. So I think just make the sales at these high prices and go on to next year.
Thanks so much, Darrell.
You're welcome.
Darrell Good, Ag Economist at the University of Illinois. I'm Todd Gleason.